All right, excellent. Well, I'm very excited to be back. I guess virtually this time to Princeton. I know Justin, Oliver, if you guys usually do like a message to the group or anything like that, or I'm happy to dive in or enter. I don't know how you want to manage this upfront piece.
Yeah, we obviously sent out your bio to everyone here, but if you would like to introduce yourself, I think that would be fantastic as well, just to remind everyone here.
Okay, sounds good. Okay, so I think our partnership with Elevate and Princeton goes back at least 3 years with Kathy and team, and then obviously the team here and so on. So super excited to be back now virtually. At Princeton, I think I was there in the fall where I met a lot of the folks in person. So I'll give you guys a quick overview of my background, but today's session, obviously this in the spring semester, this is probably like our 20th or 25th such session at our campuses. And the reason how this session is slightly different from the one we had in the fall was obviously for a lot of our underclassmen and our juniors as well, they are going through the brunt of the recruitment season as it relates to some of these careers that we're talking about, right? So I think the goal of today will be one, to help people think about positioning and just generally how to be more successful at the initial outreach, as sort of the networking piece and sort of getting a lot of looks at different firms and different roles. And then as well to prepare everyone for the interviews, which are inevitably going to come up as well. And kind of how do we make sure that everyone here is able to kind of succeed in that process as well. And obviously for some of our upperclassmen here, we're gonna have a lot more sessions with, for summer internship success or full-time success and buy-side careers, et cetera. But, feel free to use this as a form to ask those questions as well. Number one. So let me start off really quickly with a quick overview of my background here. Whoops, it's already through here. So the team has sent around a bio already, but I've spent the majority of my career in private equity and investment banking. I started out my career in this field at Goldman Sachs in our investment banking group. There, I got the opportunity to work on 3 or 4 of the largest deals that we did in financial services. And I started when people talk about industry groups, I started in financial services. I'll get into this a little bit for some of the folks who might be curious here, but one advice I have for anyone who asks me, hey, what industry should I start out in, or what sort of product group, et cetera, I give 2 pieces of advice, or two-pronged. Number one, pick something you're really interested in and don't mind spending, waking up at 8 a.m. to go read a 10K in or learn about that industry. That's important. And number 2, I would say, make sure that there's sort of leeway for you in the sense that it's actually a high growth industry. There's a lot of activity going on and you can actually learn a lot in that industry. So for me, it was financial services coming out of the last financial crisis. Obviously that worked out really well. And there's just a lot of activity going on. So I end up leading one of our largest IPOs ever, the largest since Facebook at Goldman, one of the largest M&A deals ever, and a split off and so on. So I'll talk about some of the M&A stuff later. And then post-banking, as a lot of people do, I went into private equity. Since 2015, I suppose I started at Goldman's private equity group, which is about $100 billion fund that we have within the firm, and basically investing. And what private equity is investing in companies, companies to sort of help build them over time, and then help run them operationally, help invest and grow, put capital into industries and ideas that are actually transformative to the broader world, and then help companies go through their different stages of growth. Again, we can get to what all that means in private equity. Then I left Goldman in about 2018 to join Varde Partners as a director. And so I'll take you guys a little bit further back. I actually moved to this country. I was a first-gen immigrant, moved to the country when I was 10, had no family in finance, and frankly went to a university that didn't really place into a lot of these careers. So, I think if anything you can learn from my career journey or journeys of others is that you have to take control of your own careers, figure out what are the avenues you can be successful in, and just be adamant about trying to achieve success and your version of success, right? Whatever that means for everyone here. We'll get into some of those things as well. Also at Goldman, I had the opportunity to take on a bunch of leadership roles, right? I was chief of staff within our investment banking group. I led analyst and associate recruiting for several years. So I'll talk to everyone about what we're looking for on the recruiting side, and then as well as, promotions, summer committees, et cetera. So that's that. And so why we're here, I also founded Elevate in 2019. Maybe I'll give you guys this overview before I get to the other page, which has now become the largest professional network / student network for private equity, investment banking, hedge fund, venture capital, growth equity, fintech careers. There's 4 main platforms. There's a networking platform called Connect. There's a learning platform, which we'll get to. There's a recruitment platform, and then there's an investment platform. Again, it's super cool to kind of see that build out. These are examples of a lot of the firms and professionals that we've had on. These are just are about 100 partner clubs across the country. So several of you have already signed up for the wait list for Connect. A lot of you will be, I'm sure, signing up for it or express interest in it. So you have the opportunity to meet amazing peers and people across our network, across the country and across North America, frankly. So that's sort of a cool proposition with Elevate. And I think I mentioned this earlier. We're very fortunate and pretty happy to be partnered with some of the largest firms in the world on our recruiting platform. So whether you think about private equity firms, bulge bracket investment banking firms, we're going to have on JP Morgan over the next few weeks for a recruiting event. Some of the top boutiques, you can go to the website and see some of the other ones that we have. Top 5, top 10 growth equity firms, the largest asset manager in the world, BlackRock, top 3 MBA, one of the largest family offices in the world, and many more. So I think, a lot of our, and the goal is really, to help our students across all these universities have better access to learning roles, recruiting opportunities, as well as networks, right? Because it's just, those things should be accessible for everyone, right? So I think whether you have a family in finance or you have all these relationships or you don't, you come from sort of different socioeconomic backgrounds, you should frankly be open, and you should be availed all of those sort of relationship and networks, opportunities and learning, right? So that's sort of the intention behind Elevate. Just some examples of some of the firms that we've had on recently. Okay, so I'm sure there's more to come on Elevate with Justin and Oliver, because they're very, very cognizant about sharing advice. One thing I will point to actually before we jump to these slides, and I do want to make this thing interactive, team. So I implore everyone to ask questions and make it interactive and sort of get what you want out of this. I will point to a couple of things on our website that I think you guys will want to take advantage of, and so like if you go into, as we thought about, right, 4 platforms: networking, training, recruiting, and investing. So if you go into events and you sort by firms, you'll see sort of some of the lot of the firm events that we've had and recruiting events, so on and so forth. So I think really taking it, obviously some of these are already closed because they already happened, but you can go back and sort of see, or coming up, right? You could sign up for things. I encourage you. I think we're close to capacity here, but I think you guys should sign up if you're interested in private equity or the buy side, and learn from professionals, right? If you're interested in investment banking on the diversity side, this was an event for that, right? So I think when our JP Morgan event comes up and all these things, you should go in there and sign up. So that's the recruitment event side. As I said, the Connect platform is what we talked about, where you guys will have the opportunity to meet all these amazing people across all of our universities. So definitely sign up for that when that opens up. I think we're on a wait list now. And then finally, Academy. Again, the number one thing I hear about when I go to campus is like, hey, I don't know where to go. I don't have access to a lot of resources. Career Center isn't really helping me in private equity or all these different things. And I'm like, well, how can we put together a platform that does that and make it accessible? Frankly, if you're interested, if you're really interested in private equity and no one is giving you good information, go in here and you guys will have 16 times 9, whatever the answer of that is, 140 some videos from people, General Atlantic, Carlisle, Partners Group, and so on. So really learning about Francisco Partners, Warburg Pincus, Apollo, right? So just really go in and try to learn from other people who've been successful, in the process. So that's just, again, free resources for our partner universities. So you guys should absolutely take advantage of it. And so like you could say, hey, I'm interviewing with Warburg. What is the interview process like? And go click and hear from someone who's at the firm, right? So again, these are just examples of things you can do. Before we jump into the presentation, why don't, in the interest of, we have a smallish group here, so why don't we why don't I first start with any top of mind questions that people have, and then I'll dive into the presentation. Is that fine, Justin and Oliver? Is that, can we do it that way? Okay, cool. And then I think, well, will people start? By the way, I'm not in a recruiting capacity here today. I will be in the future, but not today. So feel free to ask any questions that you think, you know, I can sort of help with. And once again, here's my LinkedIn for people that want to connect. And here's the Elevate stuff. But yeah, let's start with that.
I guess I had a question.
Yeah.
So my question was, for the differences between the bulge bracket banks and the boutiques, from your perspective, what do you think are the biggest advantages and disadvantages of each?
Yeah, it's a good question. Look, I think there's probably 4 or 5 vectors of comparison that you can think about. I wouldn't just say those versus one versus the other, but just in general. One would be sort of the environment where you will be the most successful in, right? So we'll put that as number 1. Number 2 is the quality of deals that you might be working on, and sort of the diversification or diversity of those deals. I should go through one by one. So the first one on sort of the environment that you will be the most successful in. This is a little bit underrated, right? As anyone who's already gone through a boutique investment banking recruiting process or going through interviews right now, they tend to be very, very technical, right? So both round 1 and round 2 tend to be much more technical than a lot of the bulge brackets, right? And there's a couple of reasons for that. Number one, you know, they're lean deal teams, but also there's an expectation, especially when you start as a full-time analyst, and not that it's not that anyone can or cannot do it, but just there's slightly smaller, like shorter training programs, for instance. And sort of there's perhaps an expectation that you'll be able to operate as a sole analyst on a team and sort of run with things. Again, there's plenty of rooms to make mistakes and learn, and you don't have to know anything up front, but there's definitely, I think, that kind of focus. So a lot of people say, hey, and the same question comes up about investment banking versus private equity or growth equity or something, is that if you feel like you want like a much more structured learning environment, like when I was at Goldman, we had 6 weeks of training, right? And I don't think any of our competitors did that, right? And even at the elite boutique level. So it's a little bit about sort of how structured you want that whole training process to be, and how much sort of as part of the whole versus whereas a lot of our boutique banks, they had like a couple weeks of training and then you were hitting the desk and kind of learning on the fly. So there's one is the sort of the environment that you're in. Again, my general point is there is not that much difference, Alistair, as far as the things go. But if we were to split hairs, I'll kind of go through these. So that's number 1. Number 2 is sort of the deal experience and sort of diversification, as well as size, et cetera. Most of our boutiques, right, elite boutiques, right, there's 5 or 6. We're going to have one on LionTree in a couple of weeks, so we'll ask him that as well. But you know, if you kind of think about, you know, LionTree, Evercore, Lazard, Greenhill, there's like 5 or 6 of these firms, Centerview, they do tend to do large deals. A lot of them, they are sole, but sometimes they might be with some other bank. And so one is you only really, for the most part, are doing M&A transactions, because the capital markets functions, right? Leading IPOs, leading debt capital raises, leading private equity or growth equity investments into companies, minority stakes, pipes, all that stuff is going to be less prevalent because they don't have a huge ECM desk or, you know, DCM desk. Yes, they'll be on IPOs, but they won't be like sole, you know, lead left book runner or something like that. They won't be like the main bank on the deal. Again, it's sort of, it's sort of a distinction that you might be like, what's the point of that? But I also firmly think everyone should be getting diversification and diversity in sort of their experiences that they're signing up for. So that may be one other difference. Again, depends on you. You're like, I just want to do M&A deals. That's all I want to do for the next 2 years. Great, that's fine. The third thing, I guess, would be is that a lot of the programs do tend to be more generalist. So unless you had the boutique side, unless you had like, hey, like if you're saying, hey, I want to go into banking, but I really want to do healthcare. We have a lot of students that say, hey, I really want to do healthcare. I really want to do technology. I really want to do financial services. I really want to do whatever. That's a little more conducive at the bulge bracket level because they do have structured, you know, groups across the board. Whereas a lot of our boutique banks, I can't turn on. Okay, I'll get to this question in a second. A lot of the boutique banks sort of have generalist programs or, you know, M&A across the board. And so you are ending up, I mean, there's M&A groups at large banks as well, but, you know, you do get to sort of get a little bit more of maybe industry agnostic, whereas at a Goldman or some of these other banks, you're placed in an industry group right away. And so that's sort of the experience you're getting. Maybe the fourth one is exit ops. And again, you all are pretty young to think about some of this stuff. I'm not saying young, but you're all like sort of have a couple more steps to go, perhaps, before you put all that pieces together. But I would say kind of devil's in the details. So different banks have different sort of placements and deal experiences, reputations, et cetera, that you all should be aware of. Again, nothing to really be aware of right now. Frankly, you might be like, I don't even know that I want to go do, PE or growth equity later on in my career. But just note that because their flip side is also true, because you're the sole analyst on $80 billion deal, that means you're getting a lot of deal experience at a boutique bank, right? So it's there's kind of flip side to this. And so as a result, some of our boutiques place really, really well, versus just a more general approach at our larger investment banks, which, yes, the top bucket people place really well, but not everyone does. Whereas most of our boutiques generally place pretty well. But there's so many factors in that. There's like your own drive and all these other things. So if you were sort of, there's not a lot of difference, Alistair. I think anyone who's going through the process, I will tell you that just get an internship and see kind of how it goes. And also like reverse diligence of culture, right? Be like, hey, is this the type of environment? Certain groups have just really tough cultures and just that is what it is. And so figure out for yourself as the right fit. So I'd say reverse diligence that opportunity as well. So those are sort of my high level takeaways on that point. Is that helpful?
Gotcha. Thank you very much.
Yeah, of course, you're welcome. Okay, we'll take a couple more of these like Q&A things that came in. Hi, would you be able to touch on? Okay, I think. Okay, I will connect with this person offline. Is there a target GPA that firms look for? If so, what is that? Okay, so good question. Look, I think I covered this a little bit when I spoke on campus in the fall, but if you all missed it, I'm happy to go over that slide again. But if I was in your shoes, here, let me pull up this slide. Hang on. The answer is sort of yes and no. I mentioned, I think I went over, I'll go over this slide. There's kind of 5 things in recruiting that I want you all to be aware of, right? What university you go to. So even before you get to the target GPA, you, by virtue of going to Princeton, you go to a fantastic university, which has a great reputation. However, you also go to a university which does not have all the firms come on campus just by nature of, the sort of, just the nature of the world. So a lot of the onus is on, there will be postings and stuff that's online, but you will have to do a better job on your own part to network and build good relationships with these firms. And we might get into that in a second. If there's school specific recruiting teams or there's specific alumni, I want you all to be going out and targeting them. As far as academic performance, look, I think it's part of the overall pie. The tendency or sort of there's a maybe an unspoken sort of thing that the target GPA should be above a 3.65 or 3.7. Again, team, you might be taking the hardest major at Princeton, right? Already an amazing school, and then you're taking the hardest major there. Maybe you have a 3.5 or something. And so so anyone who has those type of outside of the bound kind of challenges, those are the people that should be even networking even more, right? So maybe on paper, it doesn't stand out why you have a 3.4 or 3.3 or whatever, 3.2 or 3, whatever it is, versus someone else who's going in with 3.7, but you going in and saying, hey, this is literally the hardest major at Princeton. I'm doing all these other things. I'm also doing this other job stuff. And that's kind of what was the profile of it. Will help you, justify that perhaps a little bit more. Okay, so hopefully that's helpful to that person that asked that question. I see there's more chats coming in, but if I would much prefer if folks raise their hands, but if that's not possible, then I'll do the chat stuff. Someone is asking, how do you get a sophomore year internship bracket? Look, if you're a sophomore, I assume this is a sophomore, but if not, tell me if that's not correct. If you're a second year, you should really be focused on 2 things. One is, okay, so this is from a freshman, but let's just take that if you're a sophomore, you should be focused on 2 things. One is getting a sophomore year intern. Like, let's say it's March now, and you don't have something for the summer yet. You should be spending about 25% of your time, or even maybe 25 to 50% of your time, nailing down that internship for what you'll be doing this summer. Partly because you'll be asked about it in your interviews, and partly because having something on paper actually makes you stand out because, hey, this person sort of has something, because there's so few data points, right? Because they're recruiting so early. If I see 1,000 or 100 resumes from Princeton, it's hard for me to, distinguish between them. One way I do that is by who has made the effort to get to know people on the team, aka networking. And then number two is by just the quality of the experiences. So if someone's in there saying, hey, I went out and got an internship in the financial services field, or the fintech field, or the tech field, I think that is, to me, oh, this person's kind of already done it. But if you haven't done it, it's okay. You still have time. It's just about putting some effort behind that. And then the other 50 to 75% of your time, you should be, if you're interested in PE or IB or PE, or frankly, even consulting, you should be kind of all in now, because all of these processes are kicking off in the next sort of, 2 to 4, if they haven't already, in the next sort of, 2 to 6 or 8 weeks, that you should really sort of focus a lot of your energy around that, so that, this is when a lot of the roles get, filled, because after that, it makes it incrementally more difficult to sort of break in, if that's your goal. And if you're a freshman, look, I think a lot of these firms have diversity programs and such, so you can definitely check that out. But okay, so a ton of direct messages, and so you should definitely check that out. The timing on those is always kind of different. I think it's nice to get a sophomore year internship in investment banking, but the reality is perhaps only 5% to 10% of my Elevate audience, which is, all of the top 30 universities in the country, ends up getting a bulge bracket internship for your sophomore summer, right? So diversity programs, yes, but more broadly otherwise, very few. So you should just target whatever is in your scope of targeting. Get that internship, get an internship at the best place you can, not the best place in the world, the best place you can, and then go from there. Okay, so I think that's my advice for sort of people looking at second year internships, if they're second years or first years. Okay, was there another question before I go back to these chat questions? Okay, yeah, you're welcome. Okay, so if there's no more questions here, let me go to some of the slides that I sort of, I've covered some of these things when I came to speak in the fall. So I'll skip through some of these things. Networking, I'll definitely skip through because I think we spent a lot of time in the fall on this one, guys. So I think let me go to the interview section, since many of you will be facing interviews very soon. So the way we compiled these questions is we surveyed, or my team surveyed, I'd say something like 70 or 80 bankers who've not your class, but 2 classes above you, right, across all of our universities, as to what are the most common questions you're given, how do you answer them, and I'll give you my view on how you should be answering these questions. So these 8 or 9 questions are probably some of the most common in an interview, and then we'll get to higher views in a second. Tell me about yourself. This is both the easiest and hardest question, right? So how do you, in 90 seconds or 60 seconds, tell me everything I need to know about Justin or Oliver or someone, right? So I think really the point here is, hey, I am, I'll just call you out, Justin. I'm Justin. I'm from X, Y, and Z place. I'm obviously this is what I'm studying at Princeton. I've been extremely interested in finance careers since I entered Princeton. Obviously, I'm on the council or committee at Tiger Investments, but I've been an active member there for a couple of years. But in addition to that, I've taken on internships in X, Y, and Z, which have really solidified my interest in this career. And specifically investment banking, because I like the challenge of sort of solving complex client problems. And so here I am, right? So some version of where you're coming from, what your background is, sort of 3 questions, right? Who are you? Who are you? Why are you here? And sort of why you, and then why us? Like, why are you coming here and interviewing with Goldman, right? So that's sort of the questions that we want you to answer in a very succinct way. Obviously, we will then ask you about, okay, Justin, if you're so amazing, tell us about some of your strengths. And then I think the key in all of these questions that I'm going to go through now is, even before you get to the interview, the way you practice for behavioral interviews and fit questions is go through really spend time introspecting. And I went over this when I was speaking to you all in the fall, but on campus, but really the area that our students and candidates don't do as great a job on is introspecting up front. Where am I coming from? Like, what am I looking for? What are things that are unique about what my experiences are, and how are those experiences going to translate to this role or job that I'm going after. Obviously, the fact that you're here your second semester, you've done some of that introspection already, which I told you in the fall to do, which was, hey, think about, why do you want to go into private equity? Why do you want to go into banking? Why do you want to go into consulting? Why do you want to go into all these different careers, investing? And make sure it's something that you want to do because you've done all this research, you showed up to all these Elevate events, you know exactly what's going on in these careers, and you know kind of what it entails. Now, the introspection I want you to do is a little more, okay, how do I bring out the best of myself in the interview, right? So even before the interview, right, a week or two before that, you should be putting pen to paper and writing down, hey, if there was 5 to 7 stories, maybe not even 10, but 5 to 7 stories that I really want the interviewer to know about me, what would those be? So you make a list of those, right? Hey, I was captain of the golf team in high school, or, I led the band thing in high school, or now I'm, part of a nonprofit, or now I'm one of the council members at Tiger Investments. Whatever those things are, write them all down and then see what examples those can tie to, right? Some of those could be strengths examples. Some of those could be, hey, I had to organize this fundraiser, and my first one, no one showed up. And so I had to really, reconfigure how I did these things. And then lo and behold, the next thing I did, 50 people showed up. So I think those are sort of the weaknesses points, right? What have you learned about people? What are the failures you've had, et cetera? Greatest accomplishments, things like that. And then also things like, what is a difficult working situation? Hey, I was, president of Tiger Investments, and like one of the other board members was really, really hard to work with, just as not a real thing, but it is an example. So like, this is how we overcame that, by sort of reconfiguring the roles and responsibilities and and understanding kind of what people are really good at and aligning them, et cetera. So we're going to ask you questions like that, right? So what are difficult challenges you've had on a team? What is a failure you've made? What have you learned from that failure? How have you handled conflict? Hey, I was on a group project and this individual was not pulling their weight. So how do we tell them now? Do we wait till the project's over in 6 weeks? Like all these things that we want to really get a view into Justin, or into, Alistair or McKinsey or Oliver, and really understand, how will this person be when they join us full time? We have a client deadline at 5 p.m. and it's 2 p.m. Like, how are they going to really operate in that environment? How are they going to collaborate with each other? How are they going to, interact with the client? And all of these things that we're trying to, analyze from an interviewer perspective, right? So I'm just giving you guys the other side, what we're looking for when we're asking all these questions of you, and what we really want to see. Like I said earlier, practice 5 or 6 really, really good, poignant stories. And you should be able to discuss those in layers of depth. So for instance, if Justin says, hey, this board member was really, really tough to work with, I'll be like, well, what made them tough, right? How did you discover that? When did you discover that? What did you do about it? When did you do what you did? What happened? What was the reaction? So just be able to so pick examples. If you spend 15 minutes on an example, it shows you all these different dimensions of yourself that you want them to know, right? So I think that's the key here when we go through some of these interview points, is that people just randomly throw things out like, oh yeah, like I did this. And then you ask them a follow-up question, they're like, oh yeah, there's nothing there. I just kind of sent an email out. I'm like, well, that's the example you want to use, right? So I think just be very thoughtful and cognizant of some of the examples that everyone's using. Finance technicals. So when you go through hire reviews, most likely you will have 1 or 2 questions on behaviorals, right? So kind of why this, or why JP Morgan, or whatever. And you also have questions like, why banking? Why will you be a good analyst? Or why finance? Or, what do you know about the role of an investment banking analyst, or something like that. So just making sure you can succinctly communicate your interest in finance or investing or private equity or growth equity or whatever the thing is. And then number 2, interest in that firm, right? Great answers for that is like, hey, I've met X, Y, and Z I met Kaushik at Goldman. And so I was able to have a great conversation, and that gave me a lot of the views and the culture of GS because of X, Y, and Z, right? So just having sort of some of those examples already planned out. The other types of questions you'll get asked, and there's no great way to prepare for this other than just diving in now, is what are you tracking in the market, right? So what are the deals you're following? What industries do you think are exciting? What are the overall markets? What do you think about inflation? What do you think about, interest rates? What do you think about real estate, bubble? And on all these things, the expectation is anyone who's interviewing for jobs in private equity, growth equity, investment banking, consulting, et cetera, has spent, at least 10 minutes a day reviewing what's going on in the market, right? So I think, that's uber critical for you to succeed in that piece of the interview. And then finally, technical. Again, I'm not going to spend a lot of time on the technical piece. Tiger Investments has, I'm sure, a ton of resources that, and Elevate does too. So if anyone's interested, you can obviously check those out. But I think this is sort of just table stakes for a lot of folks and just getting past that goal. Okay. Points on high reviews, prepare strong examples, really network. Again, way better when you say, hey, I've met X, Y, and Z at this firm, and I've gotten a really good feel for why a boutique is different from a bulge bracket, et cetera. As the questions that people ask about. Following current events, really important. You're going to get 1 out of the 4 questions, always be a current events question. So just make sure you're, engaged in that, keeping your answers concise. I see a lot of people like go over the time limit and then they're like, well, what do I do now? And all this stuff. So just keep them structured and concise, and keep it conversational. It's like I know it's hard to talk to a camera, but I think it's sort of, you just kind of keep conversational and engaging in that sense. Okay, let me pause here again and see. There's, I guess, more questions here. Anyone want to ask? Oh, so let me pause again for sort of questions at this point. Yes, Asher.
Hi, thank you so much for coming. So one of the thing that probably scares me the most about recruiting is networking. What kind of like strategy or what kind of volume do you think we should aim for in networking?
Yeah, look, I think it's total. Thank you for asking that question. I'm sure I've already received 2 or 3 DMs about this in the chat on networking. So I'm glad someone asked this for on behalf of everyone. This is very similar. I just got another question, or people talk about networking. How do you make it, but the best way to do it? How do you make it obvious that you've networked with people at the front? Okay, so similar topics here, right? Let me break this down into 2 or 3 things that are in that question, Asher. Number 1, the intimidation part. Look, there's no one size fits all for everyone, right? So Asher, Justin, or McKinsey, or Alistair, or Alexandra, all will have different things that they think work for themselves. They have different strengths and different sort of weaknesses. The bottom line is, though, regardless of if you're an outgoing person or not, regardless of you are, comfortable in the setting or not, it is something that you will have to get comfortable with. And the reason why I say that is, let's say you somehow luck your way into, I say luck in not luck by like luck, but without networking, you sort of get lucky and get an offer somewhere. I think you're really, really missing out on a core life skill by not networking right now. So what I mean by that, right? Even when you go, intern somewhere, building relationships is the crux of all of these careers. So whether you go there right after undergrad or afterwards, or 2 years from now, 4 years from now, you go to business school or you go do something else, you're just never going to go away from that. So I'd rather let's start with the beginning of like, what about it is scary to you? And I've been in your shoes. I remember my first networking call. I sent the person who was a vice president, I can't remember what bank they were. And I sent them my resume, and then I had a call, I got on the call, and then they were like, hey, Kaushik, walk me through your resume. I was like, well, what do you mean? You already have my resume, right? What do you want me to walk through, right? So I just didn't even know where to start, right? So I think it's okay. And that was definitely like an F, right? For me, I never got a call back. But I think, you're just never going to learn how difficult it is to get people to be engaged in you, and make connections and actually sort of make an impact in a conversation, right? And so I think I would say, even if it's challenging, from an interpersonal dynamics perspective, you have to be out there. So that's the first part of your question. Second part of your question is, what is the cadence? What's the process? What is the sort of structure of something like this? I would say, look, recruiting has begun, right? So for all of my sophomores and for some of my juniors, recruiting has for all intents begun from the grand scheme of things, right? So applications are out on firms. Some applications, maybe 20% of the applications are out on firms' websites. Interviews are going to happen soon if they haven't already, and so on. So I'd say the time is now, right? If you haven't already, it's to sort of start now. And the way you do that is, one is the overall process is intimidating. The process to walk out of here and say, hey, I know 5 people from Barclays that will pound the table for me, Asher, on the thing is impossible if you have 0, if you're starting with no connection. So where you start off with is be organized around this process, make a list of probably every single alum, that you can think about, from class of 2021 all the way to class of 2015 or something, right? Just go through and make a list at every single investment bank or investment firm. And then, recruiting season has started. So those people are going to be on one side getting a lot of requests, but also on the other side be more be more receptive of outreach, right? Because they know the kind of recruiting is happening. So I'd say the first piece, once you get over the mental barrier, Asher, that you started out with, is sort of the actual tangible action plan, which is go make a list of people, right? So that's sort of the thing, and make a list of maybe 5 people for bank. You can go from, analyst, associate, VP, MD, right? Whatever it is. And it could be people you went to high school with or alums of your high school. However you want to get in touch with these people, just reach out to them. The second thing is your email, right? So let's say now, Asher, you spent the next week aggregating 100 contacts across like the top 15 banks, or just an example. Maybe 100 is aggressive, but maybe it's like 70 contacts, 60 contacts, whatever. Then it's time to reach out to them. And so, look, I think a lot of this you guys should be doing already, and hopefully a lot of you are already doing it. But is that communication? Hey, you're gonna reach, you will reach out to Kaushik and say, hey, I'm Asher. I noticed you're an alumni. I too am here. I'm a part of Princeton Tiger Investments. This is what I did last summer. This is what I'm doing this summer, if that's relevant. Or I'm really interested in banking X, Y, and Z. I noticed you were at Princeton as well. I realize you're really busy, but I'm going through the recruiting process right now, and I'd love to get just 10 minutes of your time over Zoom, and let me know if you have a time either this week or early next week that works for you, right? So basically a 3-sentence, 4-sentence email that just gets to the point. And look, I think how compelling you make that is the better it is. You say, I'm part of Tiger Investments. Okay, cool. One of the, strongest investment clubs on campus. Awesome, check. I did this last summer. Okay, check. So, everyone when reading your email is trying to understand, or you can say, hey, I'm a writer for the newspaper, or I am, an athlete here. So whatever it is about yourself, it doesn't have to be that I'm on the board at Tiger Investments or anything like that. You're members already. So that's, or you're here already. So you're already sort of in the loop. But whatever it is about yourself that stands out, give me a reason to respond to your email, right? Asher, be like, hey, all right, this is a candidate that I think could be interesting to respond to. Because guess what? If all 30 of you all, everyone on this call goes out and starts emailing, me, for instance, if I spoke at an event, then I'm not going to be able to do 30 Zooms with everyone, right? So it's sort of like, how do you stand out in that whole process? And then assuming those 60, you get on the phone with 15 or 20 of them. I'm just sort of making sort of a funnel approach here. If you're not getting 15, 20, guess what? You need to either fix your message or email out more people. You know what I mean? Like there's no way to there's no shortcut, I suppose, in this stuff. And then you set up a call, and then that's maybe 15, 20% of the people you reached out to. And then now you have to sort of get on the phone, talk through your story, talk through why you're here, ask good questions, and engage them, right? So as long as you don't completely botch that process, like that last stop, like people will just generally be like, okay, I talked to Asher, like I like him, I like the questions he asks, and then you should just be like, hey, I'd love to sort of be in the process. And so they know you now. And so now you can kind of keep going and building relationships. By virtue of this process, team, what will happen is, let's say you reach out to 4 banks, right? Lazard, Barclays, Citigroup, and Morgan Stanley. Maybe you get no responses from Lazard, but then someone at Barclays or Morgan Stanley reaches out to you and has a connection and they like you. They'll respond to, or they'll connect you to 4 other people at their desk, or 4 other people from the Princeton team there. And then that will multiply. So you, at the beginning, you may start off with 5 contacts at every firm, but most likely 2 out of the 5 firms, you'll have 10 contacts in 3 weeks. And then 2 of the 5 firms, you have 0 contact. It's just, that's how life is. That's how these things work. And so you have to sort of keep trying, but also sort of cut your losses at a point where you're like, all right, this is not working, or something's not working out here. So let me focus my energy on the firms that I'm actually making traction at. So much of this is story building. So communicating the best story forward. Number 2, your own personal time management, because you can't be having, you can't be like, quote, dating 12 banks at the same time. Like you just can't manage that, right? So figure out what banks you're actually, getting traction with, and go deep further, with the end goal being, Asher, like, I need you all to have 1 or 2 people from the Princeton team or the larger team, like pounding the table saying, hey, I've spoken to Asher, really like the candidate, really like for X, Y, and Z reasons. Let us see if we can get them to the next step, or, pound the table during the process, right? That's sort of the thing. Again, all of it is meritocratic. It's just sort of not like picking a name out of the hat. It's like how much work you're putting in to get in front of people. Look, there's certain elements of here which are, hey, I know someone in the family, whatever, but generally, team, I'd say within our Elevate audience, we're we see about 80% of our audience goes into banking, PE, VC, hedge funds, et cetera. 70% of those people are building their relationship from scratch. There's not like everyone has someone they know in finance, or it doesn't work. It doesn't, yes, that's always helpful, but you still have to make an impression and sort of make a connection at that point when you do meet some people. So actually, those are being like my high level views on it. I know we went on a little bit more deeper, but I think for you all, that alongside with interviewing, right, or making a good pitch are the two most important things as it stands today, right, in March of the next few months going forward, right? Is that helpful, team? Asher?
That was super helpful. Thank you.
Okay, yeah, amazing. You're welcome. Okay, let's go through what other questions people have. If not, I'll keep going through the slides. Okay, so let me go through some more of the slides. If I can pull it up, one sec. I think we're gonna go through technicals now, which some of you might be like, I don't think we're quite there yet, but let's see how this goes. Okay, so let's just go through some high level stuff. What is investment banking? So you might get asked this, let's say you're interviewing for a capital markets team, or let's say you're interviewing for a leveraged finance team or restructuring. If anyone's interested in restructuring, we had on Houlihan and Evercore bankers a couple of weeks ago, where they just broke down all about restructuring. So you can obviously go back and check that on the YouTube page. But generally M&A, right, is where you're advising clients on buy side, which is basically they're buying companies, or sell side, which is they're selling companies or divisions or et cetera. This includes basically the whole process of running an M&A transaction, which we don't need to get into all that right now. Capital markets is where you advise companies to basically raise capital, right? So either equity capital markets or debt capital markets. If someone wants to go IPO, they want to raise a follow-on offering. Other products, this is where you work with those type of deals. Leverage finance is you work with private equity companies on transactions that require leverage, right? So by definition, an LBO or a private equity transaction in this context, so not a non-minority deal, is done with the issuance of some sort of leverage. And so you'll be working to structure those types of transactions. And then restructuring is where a company runs into trouble, or you sort of have to help them reorganize or restructure their business or capital structure. So again, that is sort of the product groups, what we call them. And on the right, I have industry groups, which is you could be working in M&A, but then covering healthcare companies, right? So that's what is the end user, what is the end product that's being sold in that industry. I'm not going to get into this M&A process, which I think is a little bit more detailed, but typically, right, we're going to have a session in a couple months, especially for our third years and fourth years who are going into banking or PE, where I'm going to bring back a lot of our seniors, and they're going to talk about how to be successful in the summer internship, especially for anyone that's joining this summer or full time. But effectively, in the types of financial modeling that you'll be doing in investment banking is building an operating model. So kind of building a 3-statement model. I know many of you have not taken finance courses, so if this is all a little bit foreign, we can find ways to supplement your knowledge. But one part of it is building an operational model, which just means what are the company's operations over the next 5 years. You do that by building 3-statement models, projection modeling, et cetera. There's a second piece in banking. You'll get this in interviews. So roughly think of this is how technical interviews might be structured. Valuation analysis, right? So we'll have you guys talk about what are the different ways you can value a company, precedents, comps, or just kind of cash flow valuation. And then leverage buyouts or merger modeling, which you may or may not get into in your interviews. Again, valuation. Okay, discounted cash flows. I think when you get asked these questions, right, it's effectively a valuation question. You're trying to figure out what is the value of a company. So if I asked you, anyone on the team, okay, so how would you value, I don't know, Uber as a company? So what would you tell me? How would you value Uber? Anyone? You raise your hand. Yes, Asher.
You could look at the relevant ratios of similar companies.
Okay, what do you okay, so can you explain
like EV, EBITDA?
Yeah, okay. So first is and why are those ratios important?
I think they show how similar companies are valued on the open market, comparing their
Exactly. Exactly.
earnings. Yeah.
Exactly. So you take a metric, right? EBITDA, which is, earnings before interest, taxes. It's an earnings metric, or revenue, or users, or net income, or some metric, right? That is somewhat comparable across a couple different companies. And then you say, hey, if Lyft is trading at 20 times, EV, just as an example, whatever the current multiples are, but price to earnings, right? Then if Uber is trading at 25 times, why is that? So this is a question a banker will ask, right? So why is Uber trading at 25 times, but Lyft is trading at 20 times? Oh, maybe because Uber Eats, that's like a more of a sort of growth business in a pandemic, or or the global operations, or whatever the case is, right? So you're basically saying that it's a more valuable company, not just based on its cash flow. So the first piece, exactly like you're saying, you do what's called a comparable analysis. The second piece, which is another type of analysis called precedent transaction, where let's say, as Uber, before Uber went public, like the sovereign wealth funds put some money into either Uber or Lyft. And so you'd say, hey, they invested in Lyft at a $30 billion valuation. So that's a precedent transaction that's happened in this space. So that's one of the metrics that we should use in order to value our own company. At the end of the day, right? And okay, I'll get back to this concept in a second. And the third way you do that is what Ishan said here, or some of our people have said here. You could do a present value calculation where you basically discount cash flows, right? So if you're an investor in a company, it doesn't matter that your company has like this amazing app, or it has this like amazing whatever. And at the end of the day, it matters like how much cash is the company generating over time, not today, but over time, that will end up sort of come to you as a shareholder over time. So what you're basically saying is, let's say over the next 10 years, the company is going to generate $1 billion of cash. And so that roughly it's a 10% or 5% interest rate environment. You divide, discount each of those periods. So the cash you get in the end of the 10th year is only worth, because the time value of money, a fraction of the cost cash you'll be getting today or tomorrow. So you discount all that cash flow back to today and say, okay, in today's dollars, this is what the company is going to be worth in terms of discounted cash flow. So why, then the second question I'll ask you in an interview is, so why are both of those important, right? So what are some of the pros and cons of both of those things? Just think about it. Let's say you're investing in an apartment or in Manhattan. The cash flow analysis, DCF, would be how much rent can I get for it, right? Let's say an investment property, how much rent can I get for it over the next 10 years? And you do all that analysis, and then you get to, okay, that apartment's worth $1 million. And then you go look at every apartment in that building has sold for $1.5 million. You can't go to the realtor and say, oh, you know what? My discounted cash flow analysis tells me I'm only going $1 million. We're like, well, too bad. Everybody else in the market is paying $1.5 million because it's a crazy real estate market. So if you don't pay me $1.5 million, you're not going to get the market. So my point is, that's why precedent transactions matter, because yes, they're not based in any cash flows or any fundamental analysis, but it shows you that what the market is willing to pay. Similarly, today, markets are sort of trading at a certain level, and you could say, oh, you know what, I think they're trading too high, so I'm not going to buy now because it's too expensive. Well, guess what? You're not going to get to buy because everybody else is thinking that the market is kind of valued that way, right? So there's this component of intrinsic cash flows, which is discounted cash flows of the actual company, and there's a component of market-based valuations, which is what the market's paying for it. So again, that's just a high level summary of that. But obviously, if folks have questions, happy to go into those. But let's sort of keep going. A couple more concepts while you guys are here. I think the next piece is around merger modeling. Okay, so another crux of your job as an investment banker is merger modeling. What does merger modeling mean? By the way, before we jump into this, can anyone tell me what merger modeling and synergies or anything of that context means? What are you trying to do as an investment banker? Let's say Amazon comes to you and says, hey, I want to go buy Whole Foods. Okay. How do you tell, how do you go tell Amazon's board if it's a good deal or not, and what price they should pay for it?
If you talk about synergies, I guess an important thing is, how does your existing core business function relate to that a company you might acquire? So on paper, for example, Amazon and Whole Foods might be completely different, but if Amazon has plans, expand into the food market or more consumer products, then you could consider
Yeah.
something like that.
Yeah. So great answer, Alistair. So I think, look, I'm sure a lot of folks are thinking down this path on this question, but the first question is, Amazon buying Whole Foods versus, Kroger's or someone buying Whole Foods, it's completely different, right? So it's like, what is Kroger's going to do? So the first way to think about a merger is you figure out how much are you going to pay for this company is directly related to how much earnings you're getting from this. At the end of the day, like we said, it's earnings and cash flows, right? So those are the important things. Because companies are valued based off earnings because of the price to earnings multiple and so on. Your stockholders, your shareholders are not going to like, let's say Amazon standalone, your shareholder is getting $10 per share in terms of earnings. So the earnings, they have, $10 billion of earnings, and there is, 1 billion shares outstanding of Amazon. So every single shareholder is entitled to $10, right? For each share that they own of earnings. Does that make sense to everyone? So, that's how status quo it is. Okay, cool, we're good. That's why we're going to pay, X $100 for Amazon stock. And then tomorrow you come in and say, hey, we're going to spend $14 billion and buy this printer manufacturer. You're like, whoa, this is like a bad idea because printers are going out of business. Like, no, you're just basically taking money from the company and going and putting it into a printing company that's going to give you no earnings, right? You're just kind of wasting money. So pro forma for this deal, and guess how you paid? Let's see, instead of buying Whole Foods for 14 billion, you paid a printing company $14 billion. Where are you going to get the 14 billion? Either you're going to have to raise debt or you're going to have to issue equity, right? So or use your own cash on balance sheet. Each of those have negative implications, right? You issue debt, you're going to have to pay interest expense. So that's a hit to earnings, right? Does that make sense? If you issue more stock, you're going to have to issue more shares in the market, which means that the earnings is going to be split amongst way more people. So the EPS is going to go down, right? So they're all like reasons for why the negative side effect of raising $14 billion and going into this deal. The only way to counter that is by bringing in enough earnings from Whole Foods that's going to counter the EPS impact or the interest expense impact of taking on a bunch of debt or taking on a bunch of stock, right? So that's what bankers do when I talk about merger analysis or M&A analysis or accretion dilution analysis and synergy analysis and so on. Like, going and buying a printing company, you're going to get zero earnings, right? I'm just simplification here, but you're getting like very little earnings, but you still have to go raise a bunch of money and go throw it away. So guess what? Your earnings per share is going to go down, which means your stock price is going to go down because they're going to be like, well, as a stockholder, as a shareholder, now I was entitled to $10 a share. Today, then after the deal, I will only get $7 a share. So this is a terrible deal for me. So I'm going to, the stock price is going to go down. Or you buy Whole Foods and say, hey, guess what, guys? Not only do we get a very profitable segment, a business. Number two, we get a bunch of warehouse space that we can sort of cross-use for a lot of these things. Number three, we get to enter the retail and grocery business, which we've been dying to get into. And now we have storefronts now at literally every corner of every affluent place in North America. Cool. So there's a lot of synergies there, right? So we can ship our products to Whole Foods. We can have people return stuff at Whole Foods. We can, whatever. I'm not going to go through all the synergies, but the point is, Amazon buying Whole Foods was a better deal than Kroger's because Kroger's already has another street down the street. Like, what are they going to possibly do more with Whole Foods than otherwise, right? So what I'm getting to for you all is Amazon doesn't have to go and now buy 100 distribution centers. They can just use the Whole Foods as its own distribution center. Guess what? They just saved a bunch of money and a bunch of like people expenses because the person who's ringing your thing at Whole Foods can also sort of maybe take your return or can sort of, I don't know, there's a locker there that they can give you your stuff or whatever, right? So I think there was a lot more synergies for Amazon buying Whole Foods than Kroger's buying Whole Foods. Therefore, you got that deal. But guess what? Whole Foods, as a banker for Whole Foods, you're going to be there and be like, wait a minute, Amazon, you're giving us, a $10 billion valuation where I know combined for you, it's worth 20 billion. So you got to give us at least 15 billion. So you know what I mean? This is where me as a banker for Amazon is going to say, hey, you should pay him $10 billion and you get this great stock price improvement. And then Whole Foods banker is going to say, like, I know Amazon is getting way more value than a Kroger. So you got to pay more for this thing, right? So that's where sort of the advisory of banking and private equity and so like a lot of these things come in. Again, that was just an example, an elaborate example. But my point is like, that's what merger analysis is. You take two companies and put them together and you basically saying one of the main goals of merger analysis is 1 + 1 greater than 2. If 1 + 1 is not greater than 2, then you shouldn't be doing this deal because there's always costs of doing a deal, right? So there's sort of like banker fees or just management time and all these things that you don't want to account for. The primary is measured by calculating what I said earlier was earnings per share. So does acquiring target go net of all the transaction adjustments lead to higher earnings per share for the buyer shareholders? Merger modeling puts together all of these assumptions. I just walked you through a bunch of synergies, right? Revenue synergies, cost synergies, debt expense, and number of new shares issued, all of those things to figure out the combined impact of earnings and et cetera. And it helps buyer co and target management co make a decision in a way the trade-offs are doing deals. So again, we're not gonna have time to go through all of the technical concepts, but these are probably some of the most important ones as you think about going through some of your interviews, et cetera. So we're at kind of 7. So let me pause here and see if there was any other questions that folks had.
I was just wondering if there's any like really big distinctions that you could talk about in terms of like the recruiting process for consulting versus finance.
Great question. We've had McKinsey and a couple other similar type of people come on and speak, so you can certainly check that out. There's plenty of stuff like I'm sure out there as well. So I think for consulting, there's a couple variations. Networking is still important. So consulting tends to be a little bit more, it depends on what office you want to go to, but one thing about consulting is it is streamlined in the sense that there's a core recruiting team for Princeton or et cetera. But you also have a good opportunity. Let's say, how do you get into VC? Okay, there's another question that just came about. I'll try to get to it if we have time. You should also try to, like, let's say, Dia, you're from, I don't know, LA, right? As an example, you grew up in LA. You should, in addition to reaching out to core, McKinsey, Bain, BCG, Deloitte, Parthenon, any of these offices in New York or wherever, you should be reaching out to the LA office and making relationships with the partners there. So networking can be a little bit more decentralized, whereas in banking, kind of networking comes, sort of bubbles up to the core networking team, just because most of the roles end up being in New York or San Francisco, right? That's kind of how it is. Whereas consultants, you have offices in Atlanta, or you have offices in Detroit, or in Philly or DC or Boston or whatever. So I would just say on the networking side, you can be a little bit more expansive on sort of how you reach out to people. As far as interviews go, first round interviews are almost always, whereas in banking, you have a mix of behavioral and otherwise. There's usually two of them. There's 2 consultants if you get through, or they do half and half. There's a behavioral, but there's almost always a case. So it'll be like, hey, Dia, how many coffees are sold at the Princeton Starbucks every month, right? And then you'd be like, oh, there's 10,000 students and there's sort of 500 faculty, and there's sort of all these people that live in Princeton and they drink 1 coffee a day, but only 50% of the people drink coffee, blah, 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 blah. And then you go down the list and say, oh, each coffee is worth, $2 or $3, and cost of making coffee is $1, and so your net profit for 1 month at Princeton Starbucks is $100,000, right? Whatever the number you come to. So there's always a case study component to it, and then your second subsequent interview is going to be much more drawn out case studies, and I'm sure if we have time we can go through it at some point, but there's sort of 7 or 8 main types of case studies, like revenue, like synergies, like market entry, like there's a bunch of cost cutting. There's a bunch of different kind of case studies that are templates that are out there. And so and then obviously you want to talk about experiences behaviorally, less so on the finance side, but you have to really highlight like, hey, I am a good problem solver. I can work well with numbers or with data, or I can work well on a team. And so pulling those type of examples are somewhat similar. Whereas in banking, there's a little bit more focus on the technicals, like what I just talked about. Whereas in consulting, it's much more case heavy. I would still say networking is something you need to do, maybe a little bit less reliant on networking versus just on resume, but it is also super competitive, right? So you have to kind of stand out on the case study and the sort of why, you piece equally on this case. So is that helpful, Dia?
Yes, thank you so much.
Yeah, of course. Okay, how do you get into VC? Lucky for anyone who's interested in growth equity, private equity, venture capital, we have 400 people coming to the Saturday's event literally on growth equity and private equity and venture capital. So like venture capital, I'll just say this. A lot of venture capital firms are recruiting. You have to be very, very cognizant about the experience that you're getting in venture capital right out of undergrad. And what I mean by that is, let me give you an example. Okay, venture capital. What do you do in venture capital? You're investing in Uber before it was Uber. You're investing in Netflix before it was Netflix. Or you're investing in something that was in 2009, nothing more than a pitch deck, or nothing more than sort of 5 people ordering an app online. So ordering food online or whatever. So what do VC people do, right? So they explore technologies. They sort of say, hey, is this a good founder? Do I believe in the idea? And they frankly are pie in the sky, right? Maybe one of these deals would be good. I don't know. So the only reason I say that is VC is an extremely awesome industry. We have tons of venture capital partners at the firm level. We have a venture capital training course that's taught by 6 partners. So look, I think VC is fantastic. It's one of the hardest industries to get into because great VCs are literally changing. I mean, this is why the growth equity event we're having on Saturday is fantastic, because the firm we have on, TCV, was invested in Facebook, LinkedIn, Spotify, Netflix, Airbnb, Zillow, all these companies before they were like that. So how do you possibly do that, right? So I think that's what we're going to be discussing on Saturday. But one thing about VC, just because it's on getting into VC at the undergrad level, just make sure by virtue of the fact that it's early stage, there's not a ton of data. So what is it that you will be doing, right? As an undergrad, what skills do you have? So you have to really assess if the firm is allowing you to build those skills that you actually want to become really good at. So the fundamental point is, if you're doing a VC investment, the company does not have a lot of financials. So yeah, you're welcome, Justin. But by virtue of like the stage of investment, you're not going to have a lot of financials. So if you're looking for really hardcore analytics skills, going into VC right out of undergrad, probably not going to get you to do that. But if you want to get a lot of experience into how companies work and how startups work and how business development, sourcing, all that stuff, maybe you go into VC. So there's a lot more there for the person who asked the question. But I would just kind of say that to start off with. So, okay, we're way over. So I'm going to pause and kind of wrap now. If, like I said, if anyone has any like other questions that you want to talk through, or just want to connect, right? I'd say, oh, you know what? I wanted to ask you guys one other thing. So anyone on this call, I'm going to share a link, guys. I would really appreciate it if you had a good session. If you can, my team has asked all of our students to do this. If you can just fill out a 5-star review on this for the Elevate platform saying, hey, I learned a lot in the session. If you did, if not, it's fine, but I request you all to do this. I put this link up here. Just say you took it at Princeton, and then whatever, our team will appreciate it. But other than that, if there's nothing else, Oliver, I'll turn it back to you. And yeah, it's always awesome to be back at Princeton. Hopefully we'll do this again live, but wish everyone the best of luck, in recruiting now for over the next few months. So Oliver, turn it back to you.
Yeah, thank you so much for coming and speaking with us, Kaushik. It was awesome sort of getting your knowledge on this whole space. I think everybody learns something every time you sort of come on. And this is, it's been a fantastic 3-year relationship. We hope to sort of keep it going in the future. And to everybody on the call, Tiger Investments members, and also Princeton students, definitely stay involved with the Elevate network. Reach out to Kaushik if you have questions. Reach out to also Tiger Investments officers.
Yeah.
But thank you guys all for coming, and thank you, Kaushik.
Yeah, you're welcome, team. So have a great rest of the day, rest of the week. And take advantage. There's so many resources on our platform. Just don't be in a position where you're like, I don't know where to go. There's so many resources. So take control of your careers. And really, like, it's a long journey, right? Don't put so much pressure on yourself that, hey, I need to do this like in the next year. I've just, we do the same thing at the MBA level. It's a long journey. The key to success in this is sort of becoming the best at something, really loving what you're doing, and then making an impact, how you define impact and success. So that's a long journey, right? So just don't put too much pressure on yourself. Just because you go into a firm or don't go into a firm doesn't mean anything, right? It sort of doesn't mean, it's like what you do there. Just like getting to Princeton, now it's just one step in your inevitable kind of career journey and life journey to do great things, right? So just do the best you can and put yourself in positions to succeed, and luck always sort of favors those who are prepared. So anyway, I'm late to my other thing. So good night, everyone. Bye-bye. Bye-bye. Thank you.